Hey, what's going on, everybody? Welcome back to another episode of Wealth Defense Radio, the podcast. I am your host, Josh Inahosa, and I am an independent advisor representative for SWAN DFW, which stands for Sleep Well at Night, Dallas, Fort Worth.
Brilliant name, by the way.
Brilliant name, and the man you hear on the other side of the microphone or see on your screen if you're watching on YouTube is a guy that cancels all of his free subscription trials on time. It is Hector Inahosa.
Good morning.
And Hector started SWAN DFW about 10 years ago, a little bit more than 10 years ago.
Yeah, January 2014.
Hector is a certified financial planner, which is the top mark in our industry.
And in the original Greek, it meant smartest guy in the world. Don't just bringing news. Don't judge me.
Don't shoot the messenger.
That's exactly right.
I think also it originally meant incredibly humble.
Well, that's my spiritual gift, you know.
Yeah, some would maybe disagree. But
probably, maybe, not likely.
So today we are talking about the election, but specifically as it pertains to the market.
That's correct. We had a couple of calls. Some were one was very excited, one was not, and I told them the same thing. So we're going to talk about that. Okay, so Trump's president. Senate is Republican. Don't know about the House yet. What does that mean to me in investing? And we're going to try to tackle that today.
Right. And we should say, as we're recording this, it is November the 7th. So
right, it's Thursday, 2 days after the election. And
So before we get into that, though,
okay,
we're going to do some lighthearted news.
I like lighthearted news.
More lighthearted news.
More, okay.
We'll say.
All right.
We have talked about this before a while back, maybe even before we were on video. Orcas.
The whale. Is this a whale of a story?
It is. It's the killer whales.
The killer whale. Yeah, but they don't really kill anybody. They just look menacing.
That's true. They don't kill anybody.
Yeah.
That's just what they're called. But they have sunk another boat out in Europe.
The killer whales are sinking boats?
They are. It is their fifth boat.
Well, that's not very many.
They sank in 3 years.
Less than one a year? Maybe they're just in the way.
There have been 600 incidents.
That is a problem.
That is a problem. And nobody knows why. This most recent one, a man, it's a 49-foot long,
not a small boat,
sailing yacht.
It's a yacht.
That they were able to sink.
Whoa.
So not a small boat. I think most people...
They more than one whale hit the boat?
Yeah, they think it was somewhere between 8 to 12.
Oh, so it was a gang orca
boat
sinking.
Gang violence apparently also exists in the Mediterranean.
Was it like a Saturday night? Had they just been out at the local orca bar?
So the deal is, the guy whose boat it was his birthday party. So they were taking a 10-day sailing voyage.
Okay.
They made it 22 hours.
Okay.
Before the whales sunk their boat, which is tough. Nobody knows why.
They don't like birthday parties?
They think now it's like recreational. The whales are just doing it for fun.
That's a good idea.
Because it's happened enough that they seem to be getting some sort of enjoyment out of doing it. They also have figured out that they do it the same way every time, apparently.
Oh, yeah?
The whales will attack the rudder of the boat. They have figured out that once they do that, the boat can't really go anywhere because it can't steer. And then from there, they're able to do more damage. So it's a very calculated effort here by the whales. It's interesting that they're fighting back.
They are. Well, yeah, I don't know what they do, but that's not an inexpensive boat. Google says that's between $220,000 and $1.6 million.
Yeah.
Oh,
So,
I wonder if you can buy Orca insurance. Maybe that's a business we need to look into.
So I don't know. It's tough to just be out there and then an orca sinks. They did get saved. The people on the boat did get saved.
They found Jesus?
Well, yes. But also an oil tanker came up. And
Oh, good. I wonder why they don't try to sink an oil tanker.
it's probably too big.
Yeah.
But yeah.
But that's funny that they know to attack the rudder. What an interesting story.
Yeah.
So our takeaway is don't take your yacht to the Mediterranean.
Yeah. Just avoid.
We are a wealth of information.
Aren't we, though?
Okay.
So there's no subtle or seamless way to get back to it, but let's talk about the election now.
Yeah.
So
the orcas attacked. No.
We had the election on Tuesday.
Yep.
The results came out Tuesday night.
That's a very good thing for the market.
Yeah.
That's a very good thing. Whether whether you're on the winning side or the losing side, for investing purposes, the market likes clarity, likes to know what's happening. And so what we did 4 years ago, not good. What we did in 2000 with the hanging chads and all, not good. So we were able to declare a winner, and it was a fairly substantial win for the Republicans and for Trump. So, the fact that we were able to do that on Tuesday night is a very good thing.
Yeah, I think obviously the context was different in 2020 because COVID, and it was harder to go.
Yeah.
So everybody was having to mail in, and that was...
Yeah, and counting them, and then I think it was Thursday or Friday before.
Yeah, so there was like limbo.
Yeah, and not knowing stuff is not good for investors. They park money. They don't know what's going to happen, so they sell everything and just park cash.
Yeah.
So, okay.
So if you're watching on YouTube, we are going to have charts on the screen to help you visualize what we're saying so you can look at it while we're talking. If you're on Spotify, you might make your way over to YouTube to see the screenshots and stuff. Also, if you're listening on YouTube, give us a like.
Please.
And share it with some friends, family.
And comment. That helps the
YouTube algorithm.
The algorithm. Okay, so
let's get into it. Let's talk about yesterday, what the market did.
Okay, tell me what the market did yesterday.
So the S&P yesterday on Wednesday after the election, election was on Tuesday, the S&P 500 rose 2.5%. The Dow Jones rose 3.6%. The NASDAQ went up 3%. And the Russell 2000, which is the small companies, went up 5.8%.
Yeah, and so they're calling that the Trump bump. And again, now that there's clarity, and he's going to have the Senate, and it looks like the House, well, they haven't figured out the House yet, but he's going to be able to do some of the things he's been talking about, it looks like, when you have all three branches of government, if that's how it ends, and he'll be able to push through some legislation. And one of the things the market really likes about him, not real heavy, they don't like the tariffs because they understand that that's really a tax on America, but deregulation and letting mergers and acquisitions happen, that's been something that the Biden administration has kept from happening. And so as that kind of deregulation goes down and other deregulation goes down, very good for companies. And when companies do well, stock prices go up. And when stock prices go up, we as investors have a good year, we hope.
Yeah. So let's put what happened yesterday up against like the historic what has happened. So the chart we're going to show here is from CNBC. We'll show the S&P 500, the NASDAQ, and the Dow.
Okay.
And this goes all the way back to the election of 1980. So I believe that's Reagan.
Ronald Reagan, first person I ever voted for.
Yeah, so let's get into it. So let's start, I guess, with the most recent. It was 2020. That's a weird one because we're on the tail end of the COVID collapse.
Right.
And so we're kind of rebounding from that naturally. But the day after, the S&P 500 went up 2%.
Yeah.
The week after was 5%. A month later, it was up 8%. By the end a year later, it was 11%.
Yeah. And somehow Biden never really communicated how well the market was doing and how well the economy was doing, but people had a lot of confidence in him just by looking at what happened the day after. 11.5% over the last couple of months, November and December. That's a pretty good bump. So yeah, let's hope that Trump can match that. You can see that the election before, when he won in 2016, the day after, the market was up 1%, and by the end of the year, the S&P 500 was up about 4.6%. So it's going to be real interesting to see what happens this year.
Yeah, absolutely. At the bottom, I mean, you can see all the years. 2008 is tough, the housing bubble.
Yep.
Obviously, 2000 is tough because the other collapse.
Yeah, well, 2000 was the hanging chads, and nobody really knew. And
the dot-com.
Well, that happens a little bit later. Well, yeah, it happens a little bit later in 2001, I think. But 2000 was a tough. The last 2 months was a tough election. But if we go and we look at the NASDAQ, because we are a tech-heavy investing firm, in 2000 again, the day after we're up 3.85%, and yesterday we're up 3%, so about the same. But at the end of the year, in 2020, we're up 15.48%. So
yeah,
I hope that's good. But the important thing is, what is the median? What has normally happened in the NASDAQ by the end of the year? It's up 3.65%. So if we can just hold what we did yesterday for the rest of the year, we're going to have an average year.
Even if it doesn't go up, goes down, just stay stagnant.
Just stay stagnant.
On that bump.
Yeah, but I suspect as the cabinet is being, there'll be more news. But I think, and as you see the chart, the markets go up usually. I see 2 down markets from 1980. Mm-hmm. The President of the United States or the Senate or the House may set the rules, right? But they don't have a lot to do with what really drives a stock price. What drives a stock price is earnings. How much did this company sell and how much of it was profit? And so the environment may be good, but you still have to pick really good companies that are making really good products that have a lot of customers and have a good balance sheet. But you can see that, it doesn't really matter who would have won. It looks like we would have had a decent end of the year, but I'm excited to see what happens for the rest of this year.
Yeah, for sure. I think the other thing that we should explain from this, as you're looking at it, we talked about the median, which is the middle. People will look at the average, I imagine, and say, well, that's lower than the median. And that is because the median is taking the middlemost number. If you laid out all the numbers on the right side of the screen where it says year end, on the NASDAQ, 3.65 is the very middlemost number.
Right.
The average is lower than that because, as you can see, in 2000 and in 2008, they went down 27.67% and 11.41%. And this is not a big enough sample size to make up for that.
That's exactly right.
Over time. So that's why we talked about the median versus the average.
Yeah, and usually, you're right. You don't have a 260 basis point difference, 2.6% difference in that. But the averages, they took all the numbers, added them together, divided back with the number of numbers they had, and that So the median, I think, gives us a better idea of what has happened in the past. But as we say in investing, past performance is no guarantee of future performance. So I'm anxious to see what happens. What I do think, and again, this is not an actionable thing, but what I told both folks that gave me a call yesterday and were, wondering if they should exit the market, I said, I believe that I think the market's going to do well. I think we have a lot of money sitting on the sidelines, a lot of money sitting in treasuries and cash and checking accounts and savings accounts. People didn't want to put money into the market. I think a lot of that money is going to make its way into the market. When you have more money come in, when you have more buyers than sellers, markets go up. So you still need a really good portfolio. You want to make sure your companies are doing well. But if you have good companies that are profitable and have good balance sheets, I think the end of the year is going to be good. I think 2025, unless something dramatic, unless an orca shows up and takes out our rudder, we should be, we're poised for good. And later today, it looks like the Fed is going to cut interest rates again, lower interest rates, and that's good for the market. And here's why. Lower interest rates mean you're going to get less when you buy a treasury or when you put money in the savings account. So when you were getting 4 or 5%, that's a good. That's 5% with no risk is awesome. When it's down in the threes, maybe you buy a stock that has a 3% dividend, and then you get the growth on top of the income. So that's one of the big competitors of stocks, is how much is safe money making.
Yeah.
So Josh, we've been talking a lot about what the market's going to do going forward, but we've had a pretty good year until now. So do you have the numbers on what the three markets, and we may later talk about what the difference between the Dow, the S&P, and the NASDAQ.
Yeah.
Okay. So what have the markets done until before Election Day?
So this was published by AP News last night after close of market on November the 6th. The S&P 500 for the year is up 24.3%.
Heck of a year.
The Dow is up 16%. The NASDAQ is up 26.5%. The Russell 2000 is up 18%. So it's been quite the year.
It had, yeah. It's like I say, the Biden administration just didn't do, or the Harris didn't do a good enough job saying, we're really having a really good year and all of the metrics that, know. But let's talk a little bit about, you just mentioned 4 markets. Let's talk about what they are, how they're the same, and how they're different.
Yep.
So which one do you want to tackle first?
Let's go down the list. We'll do the S&P 500.
Okay. So the S&P 500 is the 500, it used to be called the Fortune 500. It's the S&P 500. It's 500 of the top companies in America, and they used to try to sector it out. With technology, what it's doing, it doesn't. And they're weighted by a size. They take the number of shares, multiply it by the share price, and the biggest. And there's a way they get put. You get put into the market. We know that there's always going to be 500 companies in this basket. It's a benchmark, and we need benchmarks because, like what you just said right now is really important. If I'd have said, man, my portfolio is up 4%, the next question is, well, is that a good thing or a bad thing? And if I've invested in S&P 500 type companies, kind of bigger companies, and I was up 4%,
it's not a great thing.
Yeah, so what is the S&P through?
For the year, it's up 24%.
Okay. If I was happy with 4 and found out that if all I had to do was put money in the S&P 500 index fund and I could add 24% roughly, all of a sudden that 4% isn't near as good. But if I had 4% and the market was down, the S&P was down 10%, then that 4% looks pretty good. So you have to have something to measure your portfolio by. So the biggest S&P 500 comes across all sectors. That's called the S&P 500, and that's probably the best barometer of how the entire market is doing.
The Dow.
Okay, so originally it's called the Dow Industrial. When they started coming with the stock market back in the 1900s or late 1800s, I should know this number better. I think they had 12 industrial stocks because that was the beginning of the Industrial Revolution. And they said, hey, we need to see how our stock does as we compare it to the other 11. And so they came up with the Dow Industrials. And that was pretty simple. They've now increased it to 30. and they put different companies in. It's not all industrials anymore because you have Microsoft in there, and it's another benchmark, and it's 30 companies, and there's only 30 companies in there, and they have to be a leader in American economy. And so just recently, NVIDIA and Sherwin-Williams were put into the Dow, but you'll only have 30 companies, and that's a measure that most of us use if we're invested in some of those 30 stocks, because it's a pretty limited number of stocks. As the S&P 500 has 500, this one only has 30.
Yeah, so just for clarification, they replaced Dow and Intel.
Yeah, Intel came out, yeah. And that was replaced by NVIDIA, which is another technology company that's doing way better.
The NASDAQ.
The NASDAQ is the same kind of market. Most NASDAQ benchmarks have like the top 1,000. NASDAQ is mostly technology. And so, it's just a part of the S&P 500, but it's 1,000 companies, and most of them in technology. And that's one of our benchmarks, is we measure against the S&P 500 and the NASDAQ, because that's where much of our shares are bought, is in the technology sector. By the way, the technology sector is about 38% of the S&P 500. So it does that. And then we have one last one.
The Russell 2000.
Yeah, the Russell 2000 are small cap companies. When we talk about small cap, that doesn't mean mom and pop stores. The Swan DFW would never be in the Russell 2000. These are companies that have some history. Usually they have employees, sometimes as many, as little as 300, sometimes as many as 10,000, but their market capitalization, how much money is out, in the market is relatively small. And so most companies start in the Russell and make their way up. There was a time, I would imagine, that Apple was in the Russell 2000, and they've done pretty well. Yeah. And so the reason they had a bigger jump is again, regulations always seem to favor small companies because they can do more things, and so they had a really nice bump, and that's going to be a really nice part of a portfolio, I think, going forward. But as we always say, don't put all your eggs in one basket. Make sure you have a good diversified portfolio.
So, if you have any questions about anything that you heard in this podcast, or
that we didn't answer,
have questions that we didn't answer, if you have questions about your retirement, everybody's retirement's a little bit different, and you want to talk to an investment advisor that can make a plan that suits you. And lucky for you, you don't have to look anywhere because we're right here.
Oh, what a coincidence.
I know. All you have to do is call 888-792-6339. That's 888-792-6339, which spells out 888-SWAN-DFW. Or we have an email address if you would prefer written correspondence, and that is info@swandfw.net. Both of those will be in the description wherever you are watching.
Yeah. Or you can go to our website, swandfw.net, and there's a couple different ways to get a hold of us. And if you go there, you can also sign up for our newsletter, and we put out 2 of those a month. And you can subscribe to that. It doesn't cost anything, and we'd love to share information of other topics other than what we're talking about on the podcast.
Yeah, for sure. So, it's free to call.
We're pretty nice guys.
Yeah.
No reason not to call us.
Yeah. So thank you guys for listening. We'll catch y'all in the next one.
Yeah. Thank you, and have a blessed day.
The preceding content is informational only and based on information available when created. It is not an offer or solicitation, nor is it tax or legal advice. It does not consider your financial circumstances and objectives and may not be suitable for you.